Now, let's get started. Today, I'm going to explain a two moving average strategy that can help identify 2-minute market setups. For this example, we'll practice on an OTC chart, and the candle time frame should be set to 30 seconds. First, let's look at the indicator settings. After that, I'll show you how to read this setup. Settings of the first moving average and second moving average. Let's continue to the live chart analysis. Now, notice how the two moving averages cross each other and begin moving downward. This can indicate that a potential bearish setup may be forming. Similarly, when they cross upward around a green candle, it may indicate a potential bullish setup. Using this observation, here is what I did. Once we saw both moving averages cross downward on a red candle, we marked a bearish setup and observed the next market movement. This is a simple approach that beginners can understand easily, but we'll explain in depth to identify more practical detail, so watch the video until the end. There's one more important rule to consider, and we'll explain it on the next chart. If you have any questions about the chart concepts covered in this video, feel free to ask in the comments. You can also join our Telegram community through the link in the description for more educational chart discussions. There, we break down additional chart examples in detail to help you understand how different market conditions can be analyzed. This time, we'll look for a different condition, and for that, we'll wait for a clearer chart pattern to develop. As you can see here, the chart was not giving a clear confirmation on the 1-minute candle time frame. However, when we switch to 30-second candles, the moving averages have already crossed downward around a red candle. This may support a bearish market reading. Along with that, the stochastic oscillator is moving down from the overbought area, which adds another point of confirmation for downward momentum. We explained these observations in the first example. Now, let's understand the second rule. If the market is moving sideways or showing this kind of irregular movement, we need to wait for a clearer pattern instead of rushing. This helps us evaluate the chart with better confirmation. Here, the moving averages cross upward around a green candle, and the price moves higher with confirmation. So, this matches the conditions of our setup. But if we look carefully here, there is also a sign pointing in the opposite direction, because the stochastic oscillator is already in the overbought area. So, in this situation, we could avoid treating this as a valid setup and wait for a clearer chart condition.
This means that when the stochastic oscillator is already in the overbought area, it may have limited room to continue moving upward and could later begin moving toward the oversold area. Likewise, when it is already near the oversold area, the market may not always continue moving lower. In this condition, the oscillator was already in the overbought zone. Because of that, an upward confirmation from the moving averages could be less reliable. So it is better to wait for clearer alignment between the chart conditions.
All right, let's look for another chart pattern and see how the market develops. After waiting for around 15 minutes, we can see another clearer chart pattern where the conditions of our setup appear to align. We observed the chart for approximately 1, 2, 3, and 4 times worked before making our decision. This time, we marked a potential bearish condition because both moving averages crossed downward clearly around a red candle, while the stochastic oscillator also supported downward momentum. Now, let's observe how this setup develops.
All right, I hope this video was easy to understand and helpful as an educational chart analysis lesson. You can share your experience or any questions in the comments below. You can also share your experience or ask any questions in our Telegram community through the link in the description. We use it for educational chart discussions and additional learning support. See you in the next updated chart analysis video. Until then, thank you for watching.